Hey, it's Mike with PriceActionTradingSystem.com, and it is Wednesday. It's October 30th. This will be our chart lesson for the day, and it was mostly sideways today. We had this rally late in the day after the FOMC announcement. That's what this square block is, and normally in this particular announcement, this is an actual rate announcement, and no surprises obviously today. So you don't see a whole lot of volatility here. But still, you got to be aware of it, and you want to be flat about an hour going into that, because what happens is that last hour, as you can see from about right here till 1 o'clock, we had a little movement today, but a lot of times, it just looks like it just goes sideways like this. And you just can't afford to get hung up in that. Plus, you don't want something crazy to happen, get stuck in a trade. There's actually a really nice short right here a little before 1, but you just don't want to get hung up in that. So you can't afford really to enter that. So that's what this is marked out here. There's still quite a few trades today. Actually, there's probably as many or more as there were yesterday. So, uh, but for the most part, it's a flat day. It's just a sideways day, and we did have this rally late in the afternoon that took off. And you actually get one opportunity on a reversal pattern to kind of enter that, and we'll talk about that when we get to it. But let's back out a little bit. We'll talk about the trades. Won't take too long today because there's not many of them. This shortened day due to the FOMC announcement. But you can see early on we had this channel working up here, and you get a little break and a couple of moves to a new high, and then we sold off. And there's two legs down, and then we rallied back up here, and we just kind of went sideways, really. We stayed inside this range until the news item. Then we had a little failed break outside here, a higher low, and then we went higher. And at this point, I would have at least, once you start going higher right here, I would look for at least a measured move. And you can see that's where we got to, where we find a little resistance before we pushed on up some more at 2 o'clock. And even in the close, we pushed up again. So, but that would have given you a great target into the 2 o'clock hour. And that would have been a nice move in the afternoon. But anyway, let's come back over here to the start. We'll talk about the trade. 7 o'clock came on this little correction right here. I marked this trade. It's just a first entry, but with a channel that tight, you're probably not going to get it. A second entry. You might get a higher low like this here, but really this is a higher low as well. And this is a double bottom, so like I said, on a channel that tight, you're probably not going to get many second entries. You might get a little higher low before you go higher, but we're just making higher highs and higher lows. But we do have a break in a new high already. So this one, okay, I had a little interruption there. Trying to remember where we were here. We were talking about this trade, but yeah, you may take this trade. It's right off the trend line. You got one leg up, and a lot of times you'll get two. And you did push a little higher here, and you got enough room to get out. So you may want to take that trade. It's a little risky. The true reversal was here, but that's not a very good reversal setup, and it's not a time to be looking for a reversal. In fact, we're looking for prices to probably turn the other direction. So notice we run up here and make this high. This is very tempting, but you just don't know that this move is over yet, so you need to wait on the lower high, which comes down here, which is really exactly how you'd want to play this. You wouldn't want to play it probably above the EMA. So notice how that shoots right through, pulls back, and tests it. The only problem with this one is you are going short at the very low, but that's all still one move right there. And I wouldn't even really call that a correction. So we probably going to trap some longs right there. I like that to at least try to get a scalp, and you end up getting a nice move out of this. You get an actual failed second entry long here, but I wouldn't take that way down here. Now you've got one leg, then a little jog back. I'd really consider that all one leg though. And so I don't think you want to go short here. You don't really have enough room to get out before the low. That's the very low of the day. It works, but you don't want to risk that going short way down here after a big move like that, because too many times you'll get that second leg. Notice that it just pushes a little lower, and then you get that two-legged correction right there. So this is just too risky. But anyway, you push on down, you come back, you get that two legs back. Mine didn't set up very well. This is just an inside bar. This is really my signal bar. And with all those matching lows, and this not even being a real good bar, you just can't take this on mine. Another trader asked me about this trade. I believe this is the one he asked me about, and he took it. But he had a nice bearish bar here on a second entry. And he was actually asking me about some slippage he got right here to his favor. I don't know if anybody else got any slippage on an entry right in here, if you had a good setup. If you did, especially if you were live trading, if you would just post something on that. But he actually got, I think, I can't remember what he told me, but I'm guessing it's because he was sim trading, because I just don't know why you'd get any slippage right there, especially positive slippage. So anyway, not a good setup on my chart, but then we make a lower high right here. Notice high prices try to go higher again and fail. That's the place to get short, and I'd be looking for that measured move here. Here's your first leg. There's leg two, and you can see we got a little bit more than that. That would have been a perfect target basically. And so you catch that one trade, that's all you need for the day. Probably either this one or either one of these, because you would have got a runner on either one of those. And then of course now you got two measured legs down, and you got a double top here. So first entry, second entry. So that's a second entry long, way away from the EMA. You may want to risk that because you may catch an important low, and sure enough, that would have let you ride this all the way back to the top again. But notice what's happened. We're running up. This is almost a little repeat pattern of this. We get the break and a couple of moves up to a new high, and then we reverse. The reversal doesn't look quite the same, but this little move up looks very similar. So, but if you could catch this, that's a great move. But notice your reversal pattern right here. Failed second entry short. Fairly bullish bar. I like going long there. And then we just get stuck in this. Just stay out of this. This short would be tempting if you had enough room right here, but you don't. So I'd skip that one. And then, of course, you got your failed breakout the bottom. You do have enough room right here to get out before here. So you may want to take that trade. I'm only marked that one green because really you want to wait on a lower high here, because this could go lower. It is the first break of this. This is a spike in a channel up, and this is the first break. So odds are we're probably going to attempt to make a new high, or at least come back and get inside this range. So this is another one you may take that might give you an important low. It's good for a scalp and not much more. I don't see any reason to hang on through here. Even if you had a runner that survived, I don't see any reason to hold on through that right there. And you want to forget about failed second entries and failed failures and stuff in here, because you just get chopped up in this stuff. Somebody else asked me about that. When you're going sideways like this, forget about failures, except for failed breakouts. The idea is you just want to get short near the top or long near the low. And things that look like failed second entries and things like that and traps, they'll just whipsaw you to pieces. So just forget about that when you get in those tight ranges or congestion areas. And of course we got the break, and we move on up here, and we make a high, then we make the lower high right here. This is a double top, so it's basically a lower high. And look at that big bearish bar. I like going short right there. This is a fairly big bar, so you may let it break lower and drop a limit order back in a few ticks, and you could have got filled, and it just takes on off. It gives you a lower high here, but not a very good setup. And then suddenly we're going the other direction. But notice that low, first entry, we push on through the EMA, we turn back down a second entry that fails. Your entry would have been one tick above this bar right here. And your stop obviously goes below the swing low, so it has to go down here, but your entry would have been one tick above that bar. Normally I'd say no, we don't want to enter above an inside bar. They're kind of risky, but this is a failed second entry short when we're trending upwards on another spike in a little channel here, and this pretty much does confirm the trend line. So it became a failure when it broke higher right there. So I like going long. You got to consider that the resistance up here, but really at this point it would have moved up here, and you should have enough room there. I ended up moving this back where you got the most touches for the day, um, because that does come back into play later again today too, and you can see it working off the top here as well. But at that point it would have been a little higher. So I like that entry just on a reversal. And you come up, you make a high, you get a break here, a lower high, but this takes you into the 12 o'clock hour. I don't see any setups I'd want to take. If that was a big bearish bar, you might go short right there. But being that close to noon, with this being a FOMC day, I'd just skip it. And of course, this is all self-explanatory based on what I already told you. This is just where you probably want to be out. And by 15 minutes or so, it looks like we're kind of back to normal. And of course, we rock it up here, and you get that failed break higher again. That one is tempting. I'd probably wait on the lower high, which comes right here. Just make sure you got enough room to get out. You may let it break lower and try to get a little better entry. And you may risk that one. You know, you could argue for that one to be green, being that bearish, that far away, but it's so, it's still really, the problem is you're still really just starting to slow down and get back to normal. So it's probably a little risky at that point. But I like that lower high, and even this one is a possibility because it does confirm that trend line. It is very bearish. If it had a broke on lower and not ended up with three matching lows, I'd probably say take it. The other problem is it gaps over and just keeps going. It does come back, so you could have gotten filled on a limit, but I don't know if I'm going to let it trade down to here and then come back. So you should probably skip that trade. And of course, you're moving up, and you get your first break here, and you get a nice bearish bar. And this is a second entry short. Notice this low, you're moving up. Pull back, you move up, and you turn down. There's a hidden second entry there. It never broke lower on this chart, but it's there. And if you recognize that, that's probably, there's enough room to get out, so that's probably worth taking. And of course, it goes just a little further and bounces. And notice what it does here. It runs all the way up, right back through the resistance area. Pulls back and tests it as support, but it also confirms that trend line right there on a little reversal type pattern. Nice bullish bar. I like going long right there. And off it goes. It pulls back here on a little breakout pullback and again tests that trend line, but now you're starting to get a little too far away from the EMA, and you know it's going to fail pretty quickly. And sure enough, it would have worked, but it doesn't take long till you've you're failing. And you knew where your measured move was here too. So it's right in the same area. So you might, if you really want to be aggressive, being this late in the day, I wouldn't want to be that aggressive there and the problem is if it's late in the day and you mess up and you have a loser, you don't have time to make it back. But if you're in the morning and you have, a bad trade and, you lose your 2 points or whatever, you got time to make that back, because you still got the rest of the trading day. But today, although it was a shortened day and you may not have had many trades, so you might have want to risk that because you can see that trend line still in play, and that just pulls back and bounces right off of it. And we don't quite have a measured move there. That's the other thing. At this point, we don't quite have it. You still got room, so that might be a reason you would consider it. So you can see your measured move is way up here. So you got enough room at that point. So, but anyway, again, you can see when you back out, it's mostly flat today. We're just kind of, you can see how flat the EMA is. Of course, it's moving up and down, but it's pretty much flat. And just not much happening today. So, of course, you got that FOMC announcement, and you can see once it came out and the market kind of Always resets. Usually the news runs it up and then it comes back and it resets and starts over, and we trended up from there. So evidently the market liked what it heard, but I don't. But the market must have liked the quarter point cut or whatever. So we rallied after that. I was a little surprised that maybe they cut it another quarter this quick, but that's great. Maybe it'll help the housing market pick back up, start picking back up again. But anyway, um, that's what we had today, mostly sideways. A little rally late in the afternoon after the rate announcement. Had time to reset. Basically, reset back to where we started. And that's generally what will happen on a big news day. You'll get a crazy move, and I mean, this is relatively tame compared to what you can see. But you get your move, and then once everybody calms down, it'll kind of come back and reset, start back to where it was, and then it'll do whatever from there. And we rallied from there. So evidently the market's like the rate cut. But anyway, that's it for today. Again, not a lot of trades, not a lot of movement, and these can be hard to trade because you can get whipsawed. And just remember, you're trying to get short off this resistance and long off the support. And occasionally you'll get these little short-term trends, and you can play those out. Just be careful when you start to get away from the EMA long distance, because you're going to snap back before long. And that's basically what this line is a moving average. So that gives you the average. And you don't stay away from the moving average very long in most cases. Like here, once you got way up here, look how long you've been away from the average. It's just a matter of time till it comes back, and it does, and it hangs around there for a little while before it takes off again. But you can see the difference between the EMA here and the EMA here, which is just kind of meandering along up and down sideways, where here all the prices are consistently above the EMA. That's a trend. When you're going back and forth above and below consistently, that's a range. So that's one way to help you find that. But anyway, I'm going to wrap it up. We'll be back again tomorrow and wrap up our week. I can't believe I'm saying that. Quick week since I was gone a day this week. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.